Good morning everybody, and this is your Dow Jones setups for today. So no idea what happened with the sound yesterday. Hopefully we are fixed, but anyway, we are traveling next week, so we'll try to pick up a better mic which should clear up the static and also clear up the problem that we keep having every now and then. So CPI data was not as expected, which caused us to fall. The short story is that the Fed's now may have to consider a rate hike before they start cooling and start dropping rates. So we'll have to wait and see what transpires. I sincerely hope it's not the case, but anyway, that's where we are. And we have bounced off some structure here, 38,111. Now, from the 8-hour perspective, trend is up. There's no two ways about that. And hindsight being a perfect science, we had lots of rejections up here, and somebody did know. There's no doubt about that. Somebody was placing their bets based on the data, and got themselves a good 780 pips at the moment. Now, trend is still up. There's no debate about that. The oscillators are pointing at the downside though, so it could be a flip in direction. But we need to be below the 150 before you even consider that on the 8 hours. So for me, when we start drilling down through the time frames, whatever structure we see is still against the bigger trend. So any short that you see is still against the bigger trend. Now, we do have a big juicy pin bar off a solid area of support, which is 38,111. Now we obviously have to break above that pin bar for that to be validated, and I just want to see if there's no structure here. Well, there is structure, but it's not at the pin bar anyway. So you can see these tails here is what you'd need to get it back above and build a base on, but you need to get it back above 38,315 on the 3 hour, and we've had 2 3-hour bars which hasn't done that at the moment. So the longer this goes on, the less likely that probability is. So just take that with a pinch of salt. Just don't assume it because it's a pin bar. It's now going to reverse. So look at the 1 hour. We were above all the moving averages. In one day we've dropped below and we've crossed over. So this is the first area of potential support, 38,315, or should I say resistance, not support. And then there is another one just above it, which is probably a little bit more playable. And you can see there's a pin bar here, and then there's some tails that uses support here. So resistance and support. We did test it though yesterday. No fractal on this test. So that's 38,414. Could be a double bottom setup. If you look at it on the Bollinger Bands, as I've said with the other instruments, you'll see that this is a W bottom setup. It's a potential double bottom. You've got a big juicy pin bar, but I've seen these kind of setups fail so often that I don't even pay attention to them. If we are below the moving averages, the trend is more likely to continue moving to the downside. I'd rather wait for a higher low and then pick it up from there. So what are we doing today? Today we are going to drop down to the 15 minutes, and we're going to pay very close attention to a few areas of structure. So the first area is this zone at 38,315 and 38,269. I want to see price move down, come back, reject it, and then we have to see what's going to happen at 38,111. You can see we didn't really respect it that well, but we did come below there. Then what I would do is just get onto the hour, because you have so much potential here for an ambush. So as far as I'm concerned, it is still up until it's not. I'm just going to put another level in so we don't get too excited. And let's come back to the 15 minutes and then just condense this. So you look at all those levels I've just put in, that is a strong area of support. So I would be taking profit at 38,111, 38,056, 3,800, and 38,945. I think 3,800 is probably your key defense that we're going to be testing. We're going to have to break through 38,269 and test it before I even consider jumping in. If we get back above 38,414 and we start building a base, then you are more than likely going to continue with the range, and that's going to be a messy one as well, because each of these fractals to the upside are going to offer resistance, and especially this area here where the 150 is. So that's 38,562 and 38,622. So moral of the story is be very careful of what you do here. Don't just jump in for the sake of jumping in. I think indexes have got they've got all the noise from the Feds, but then they've also got it's compounded with earnings and stock noise as well. So I'd be very cautious. I think it's going to be very volatile. So whatever you do, you're going to be scalping this. You're not really going to be looking for any long-term or medium-term stuff. And from an intraday perspective, so you're not going to be holding on to positions for a couple of hours. You're going to be holding on to them for 15, 20 minutes, half an hour at a time. Okay. Anyway, that's kind of my view for today. Be very, very careful about this. Don't just assume we're going to continue the trend. The bigger trend is up. And also don't just assume that we're going to reverse with the bullish patterns, because that could also be a trap to set you up. Anyway, caution is the name of the game. I hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.